The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be on Monday through Friday, and this being October the 29th. Just one day to go, and that October candle, the monthly candle, is complete. And so far, it has been quite a spectacular month. And what's really interesting is that as the market pulled back after the Fed announcement yesterday, after being up 100 and something in the Dow, goes to just a fractional gain, and then all of a sudden later on it screams to the upside. A bunch of thoughts came to me, and one was that this time last year, you remember we were talking about October, and I said that markets that survive the September-October decline and then act very well in October have a tendency to attempt to close the year at or close to all-time highs. And the Fed just confirmed with its Japanization of our bond yields, keeping yields as low as possible. And we just had pending home sales that are tumbling most since 2013, thank you, Terry and the Den, amid signs of a slowing U.S. economy. This is suggesting a bunch of things. So let me give you the conclusion that I've come to first, and then we can go into the preamble itself. With interest rates this low, there's no question that investors are going to be forced to constantly keep looking for a greater yield, capital yield, because they're not getting the dividend yield. And that really puts us in a situation that says that the tide does not change, that the larger tide that started to come back in when we made that 15,370 fake crash low, is suggesting that at worst we might go sideways for a while, that we probably will not test the Dow low or get even close to the 16,000 level. Some of the other indices are not acting as well, but certainly what's really important here is that the XLF, the financial ETF, has started to improve a lot, and that the thinking now has to change, that selective areas are possibly in a situation where they've concluded their major upthrust and that they're going to be pulling back from here. Other areas that have had tremendous declines are in the process here of having fund managers feel out whether or not these are the areas to go back into, having taken money out before. That would include the IBB, which is actually up 5 at 336. That's the biotech area. Even the XLV is acting quite well, not great, but acting quite well. Leg D, both of them. What's really important about this period that we're looking at, and now I can go through the numbers. If you're looking at, let me run the numbers. The E-mini is down $5 at 2079. There's that dash trend line that we've been talking about. My estimation was that yesterday we should have held to a lower ground as the market tries to assess why the Fed is refusing to bump up interest rates, and that would be saying, hey, the Fed is really nervous because they can see things that are suggesting the economy is actually quite weak, and then the market has to assess exactly what's going on. So that spiral to the upside at the close was a little bit of a surprise to me. We're getting over the period of last evening into early this morning, and even periodically this morning, you've had the sell-off continue. That was a sell-off to get back to where we were, but there is buying going on. There's no question about it. And that the tide that was going to low tide, and I spoke about an internal low, that was the low that we saw on August the 24th, with a residual low. The fact that we had an H pattern, let me just show you something here. I think this is quite important in terms of chart formations. Look, let me go to the Dow. The Dow did take out the October low, but basically there's that H pattern or arch formation. And what happens with an arch formation is And keep looking at this middle one. That's the weekly. Look at it, and yeah, we're changing the name. Look at it, and you'll see that this one is the S&P, the 500 index. That 500 index on October the 17th of 2014 went to, that was the 15th, sorry, the week of the 17th, went to 1820.66. Then ran all the way up to 2134.72 the week of May the 22nd, and basically double topped and then came down to 1867. That 1867 is 47 points higher than the October 2014 low. So that's the H. Then what happens is you see this pattern. I did initially draw it in, and now I've got something else. But that initial drawing was the one that I really should have stuck to much closer and said, hey, there's that H pattern that can, in fact, do a retest, and it did. So 1867 was the low the week of the 28th of August. And then what does it do? It comes back down to that September 29th low of 1871.91, a higher low. Now what you can do is you can draw in a trend line like that. And that trend line says, aha, held the support. And that suggests that that was the internal low. And 1, 2, 3, 4, well, 5 weeks later, we got the residual low. If that residual low is actually in place, that allows at 2085 the S&P to have a much greater 2025 9-period moving average support. But at first, the 2032 level of the 200-period moving average in the daily. And so we've got a lot of support in that area. And I'm suggesting that at this particular time, I thought that we would see that earlier in the weekend. In the charts that I sent out over the weekend, I said that my suspicion was we would have the early part of the week would see a consolidation. Well, we saw that right into Wednesday afternoon and then spiked up very sharply. I would suggest that we're still in some kind of a consolidation right now, but the bias has to be that most people who have not been in the market are probably going to be looking at this and saying, you know what? I'm just going to have to get back in. So let's run the numbers. The Dow is, let me move this away. The Dow is down 66 at 17,711. The S&P is down 4 at 2,086, a little stronger. The 500 are stronger than the 30. Comp index is down 15 at 5,079. VIX index is at 1514, up 81 cents. That's saying people are a little nervous there. And now this is going to be very important because the BKX index is down just a tad at 0.40 at 74.46. If you look at the XLF, here we go, XLF, and I'll take callers in a moment. XLF has screamed up to the 2450 level. I like the action very much. I think this we can call, at least for now, leg D. And the stochastics at 90%. So pull back to the 2390 to 2364 area is going to be the big test of any weakness. And I suspect we will try to get there. But the weekly chart has really improved a lot. Let's go to the TLT. We've got the TLT down very sharply at 122.22, down $1.61. There's that H pattern again. This is going to be very important. Why? Because if the TLT starts to trade at 121.40, breaks the left side support of 121.66, that's going to suggest you could make a larger H pattern in the weekly chart, and therefore we'd be looking at 116 as a possibility. If at any point in the next 3 weeks, 118.55, the low of September, the week of September the 18th goes, you've got gold. That's going to be also quite interesting. Gold is down 27 at 1148.90. I've been talking about the strength of the dollar, and as long as the dollar was able to rally up into the 97.50s, and it actually surpassed it yesterday, it went to 97.82, giving back some of it today. This is saying that the weekly chart is attempting to break that dashed resistance line. That's going to be very important. So I think we've covered a bunch of things. I want to go to Mark in Denver. Mark in Denver, how are you? Have I got Mark? I think Mark is there, but maybe there's a little delay if he's listening on the computer. So let me just do this. I want to look at, I believe, USX, which is the symbol X. This is United States Steel. Mark, if you're there, just yell, I'm here. And most importantly, what we're looking at is the low that was made at 9.66 on October the 2nd. Let me double check. Yeah. had a very nice spike up to the 13 area, but then it gave back a chunk. And that chunk was a little bit more than I would like. It did fill the gap from the 2nd to the 5th. There was a gap from the high of 1062 to the low of 1071. So you've got a 9.9 cent gap. Now, what's really important about this is that we had looked at this and I thought, okay, there's possibly a trade here. But the AKS, which is the steel company, is called AK Steel Holding, which had a slightly better chart, has in fact still kept that better chart. We did buy, I think, I can't remember now, it's so many trades ago. Yeah, we went very small long at 285, and 285, and I think we were just stopped out. I can't remember now, just offhand. But it was a small position. I didn't want to keep it. If we were taken out, we were taken out. Now it's come back to 275. Now it's really important about this. I drawn a left side, right side price time match, which goes to exactly tomorrow. And that said that if you take out 319, you should be going against the trend line and go all the way to the 319. If you took out, 319, you should be pushing higher, and you should go all the way to the high of the 5th of August at 343. So I'm not sure quite what's going on in terms of the pattern failing. And I'm just going to put a question mark here for my engineer to see if I'm not missing something here. So, Mark, I'm not sure if you entered it or whether you're looking to buy, but AKS, in terms of the two charts, I'd probably put AKS again as one of a little bit better formation that I'm looking at. Also at $11.24 for U.S. steel and $2.74, since they have close to the same pattern but slightly stronger. Slightly, I say slightly, because a lot of evidence says that that pullback that we just had was really, I would say it was about 40 cents too much. And because of that, that's saying it could be a struggle. But I would nibble at 275 on AKS. I would just start the position, and I'd have to give it 2 days into Monday afternoon, maybe 3 days into Tuesday morning, and I'll tell you why. If in fact there's a follow through tomorrow, let's just say there's a nice close today and there's a doji candle tomorrow, and then Monday it pulls back. That pullback has to hold 263. That's the 9-period moving average. If it does that, then all of a sudden what you're looking at here is that you've had a number of V-shaped formations, both on the upside and on the downside. Instead of the cup, is a much larger cup, which hasn't worked yet. But it's really the V and inverted V-shaped patterns that we're looking at. And there's another one. And it came back, and it closed quite nicely yesterday, rather than closing at the low. If it closed at the low, I wouldn't be touching this. But it closed quite well 2 days ago. And then yesterday it had a very nice candle. I do quite like it. So I know that you're watching this closely, so I'm suggesting at 274, you can start your position. The real test is going to be 263. How does it handle that? If, in fact, it goes from 274 right now to 283 by tomorrow, then you're going to have a slightly different strategy, and I would then have the entry for the second portion at about 268.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So hi folks, we're back. Dow's down 70, S&P's down 5. Let's go in order of questions that I had here. XOM, which is ExxonMobil, trading at 82.25, down 3 cents. Making a leg F right now, hitting the 200-period exponential moving average. Remember, we spoke about this. I said that this was, in my work, it completed a Elliott wave, based on at least my Chapman wave methodology, down to the 66.55 level. Should have a really good bounce, but it would still be treated as a bounce. So the question is, earnings tomorrow, what would I do if I had someone I wanted to get to start taking at least a little bit off? So the question here is, it's a great question because, wow, is this the start of a brand new move to the upside in the oils? Well, I don't think so. Nothing about the chart suggests that it's just other than a big bounce that's going to have to do some retesting in the 79 to 77 area. This is my thinking, that regardless of what the earnings are tomorrow, and I'm not sure how great it can be, but you never know. You know, remember, DuPont had lousy earnings. Next thing they changed the CEO, and the stock goes up 13 points. So we're looking at this in a way that says perhaps this is a good time, especially if you're treating this as a dividend stock, to at least take a nice capital gain on some of your money. So here's my analysis. At 82.23, I would take something off. Would I take a third off? I'm going to leave that to you, but my suggestion would be, yep, a third off of your position. Reason being there's a good chance that it's going to go into some kind of consolidation here. And if it does, you're going to have a chance to reassess to see whether or not, since you're in your core position from lower down, whether or not you want to add that back and treat it as a dividend stock, because dividend stocks might get a lot more play in this particular market, especially now that we're looking at the TLT down sharply, which means that the yields have suddenly bumped up. So I'm going to suggest take something off right now. You can decide what it is. If you ask my opinion, I take a third off, but that's a third that I try to dedicate back to Exxon. If it drops, I prefer somewhere in the 78s. It's at the 78 would be 5 points lower, so it might take 2-3 weeks to get there. And then if it does that, then you're going to say, okay, are we making the H pattern in the weekly chart and the monthly where it's going to start coming back? But you know what? You'll have a great deal more evidence at that point on how the stochastic and the daily chart is acting, how the technicals and the weekly, and then you can make an informed decision. And if it goes up even more from here, you've got your 2/3, and that's real nice. And in fact, I would even suggest that if it breaks above 83.50 and goes to the 84s right in this period, then what you would do is have a look at it again and assess if it comes back to the 81 to 80 area, whether or not that's where you want to put back whatever you took off at 82.22. So I don't think it's a not necessarily a win-win, but it's more it's treating it as if you had the right position. At this point, you still have the right position, and you don't want to overdo either the buying or the selling. So you're just taking some off, both to reward yourself and part of money management. It's had a great move, 66 in the 66s to the 83s. That's a fantastic 17 points. That's huge. So yeah, I'd be taking something off now, and you can, as I say, dedicate it. So a good question. As someone mentioned, I don't see that much of a difference between the Dow chart and the XOM chart. Well, have a look. Look at this sharp V-shaped pattern. Look at the way the Dow has gone all the way to that dash trend line, and it's now it's being repelled a little bit there. So I see a big difference because the recovery is much greater in the Dow. In fact, let me just put it this way, because I don't want to run out of time and forget about doing this. I was going to do this yesterday. Look at the Qs. 114.39 was the high of the week of the 24th of July. And yesterday, what did they hit? 114.02. We're talking about 27 cents away from a recovery high, 28 cents from the actual recovery high. That is fabulous action. I'm having a tough time saying that the Qs are going to retest at 26. I don't know what we're taking down 26% to test the 84.74 low, but even if it was to test 108, the 9-period moving average in the weekly, it's going to have to be a lot of bad news coming out now. So that's, at this point, is acting very well. I do expect the gap to be filled between 110 and maybe even 109 over the coming couple of weeks. Good point, but they really are actually different charts. Look at the weekly chart, the monthly chart. There's no comparison in the Exxon chart. Let's go to Frank in Gloucester, Mass. Pretty Gloucester. Hi, Frank. How are you?
Pretty good. How you doing, Basil?
I'm doing well, thank you.
Good. I'd like to change the symbol on you, if I might. Could you take a look at BP, British Petroleum?
Okay. But you did have FAX, and this is the one that I often talk about. This was a company that was started by my best friend in high school and also the best man at my wedding.
Oh, really?
Facts, yeah. He sold it. His timing has always been unbelievable. He was trading gold back in college when nobody even knew what gold was. But let's go. I'm going to do both Fax and BP. We'll be right back.
Thank you.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back. So we're on with Frank in Gloucester, Mass. And I just wanted to quickly say that FACS used to be the star. It's called the Aberdeen Asia Pacific Fund, Income Fund. Basically, I used to look at it as whatever the dollar was doing, it did the opposite. And one of the reasons was there was a relationship there between yields and the dollar. That kind of changed when the company was taken over. It now has a slightly different format. In fact, it's had a nice rally here, but nothing like the dollar. So I'm going to skip that for now, other than to say that it's acting well. It's at peak D, and I'd probably want to look at it if it pulled back to it's at 479. And if it comes back to below 470, I'd want to look at it again. If you can, give me a call when you see it trading at that level. Then I'd be interested in seeing whether or not it is a buy. Now let's go to BP. So in BP, do you have any position in BP, or is it just a question?
No, I've been trading in and out of it, but I'd like to. I'm after the dividend.
You see, in terms of the dividend, if in fact BP, if it pulls back at it's a 35.66, down 9 cents, British Petroleum PLC, integrated oil. If the monthly chart has improved, but not improved enough for me to say, I think this is the start of a much bigger move. I think it's the same as Exxon and the others. On a weekly basis, I think it's got it could even have another couple of weeks hanging around on the upside rather than the downside, then I think you've got to be careful. This is just the way the chart seems to me at this point. So I'm speculating. 37.15 is the resistance in the 9-period moving average. However, BP has held very well. And I have a little slightly different opinion of it technically than Exxon. BP, if BP is able to squeak to 36.32 to start leg C, I would prefer that it didn't hit it and then pull back. But if it went to 36.32, and then the same bar that went to 36.32 actually started to climb, so that the 120-minute chart, let me just check this out. Yeah, so the 120-minute chart is starting a rectangle breakout rather than just continuing. That would be very good. Your big thing is, what is the downside? And in this particular instance, I would probably say to you, at this moment, do you have anything at all? Are you long or?
No, I get worried this morning when, Marathon Oil really cut their dividend, although their chart looks miserable.
Yeah, that's a terrible looking chart, right?
Yeah.
So, okay, I'm going to recommend, because it appears to me that this is an area, just at least for the next few weeks, has the potential to look like a dividend stock, which of course it is, but it hasn't acted like one at all for a long time.
Yeah.
I'm thinking that if you at 35.66, do you put in a stop, or you put in do you put in a tight stop, or what do you do?
I wouldn't be putting in a tight stop. Maybe below the big swing low of the.
You're going all the way down to 29.35.
Can't get back to my chart, but yeah,
that was the low of the 28th of September.
Yeah, the Gulf low, Spain.
Okay. Look, then I'm going to say something. What I normally would do is I'd have a different positioning. I'm going to suggest to you that at 35.72, it's only down 2-3 cents today, and even if the market doubles down, it's been acting well. I'd start my position now. I'd start a position. I don't want to tell you the proportion, because you know what you're always comfortable with. My contention here would be to start whatever position it is. I'd start at least a third of my position right now.
Okay.
That position, because it's a smaller position, can have a bit of a wider stop. But I have to tell you, I would not want to see it close below 34. So that's a 1 3/4 point. It's a 5-6% stop on the small position. Now, if today is Thursday, if on Tuesday or Wednesday of next week, this thing is held like a rock, it hasn't even broken yesterday's low of 35.07.
Yeah.
But in fact, it's trying to test the upside. All it needs to do for this Chapman wave falling axe formation, all it needs to do is break out and hold at 36.30, which is only 70 cents higher. Shouldn't be a big deal for a stock like this. And all of a sudden, that weekly chart is improving, the daily chart is improving, and I'd be very comfortable. So my trading position would be 1/3 now, 1/3 at $36.32. And that second third has to have a pretty tight stop of about 40 cents. Why? Because if it's going to succeed with leg C and leg D, it should not pull back. It should break out. The moment it gets to 36.32, it actually should immediately go to 36.42 or something like that. Okay. So I hope that helps you. And then if you can, let's talk next week and say whether you did it, how it's working out, and we can reassess.
You're on. Thank you.
Thank you very much. I appreciate the call, Frank. Sure. So it's Frank from Gloucester, Mass. And as I say, very quaint as a fishing village. Nice little downtown. We always like Gloucester. So this is what I'm looking at. Quick question. IYT is holding okay. You can make a case that it actually looks a little bit like the BP chart I looked at right now, but actually, no, it looks a little weaker. And a couple of questions came too. So Julie asked about the trannies. So here we are. I'm looking at the trannies, and they're going to be the most influential index. Why? Because if in November, by the middle of November, say the start of the third week of November, if the IYT, the transportation iShares, trading at 145.82 now, is actually above 152, I would suggest to you that the trannies have completed a chunk of their consolidation and now have a greater upside than downside. support has to be good at 140. So 6 points higher, and it's looking very good. Excuse me, 5 points higher, 5 points lower, not doing that well. But at this particular point, I would have no position. I'd actually wait for a little more evidence. Let me have a drink of water here. Now, the next thing I wanted to look at was question from UNG. No, not the question from UNG. It's about UNG. UNG has just turned around from a little doji candle reversal yesterday. This is I don't want to call it an island gap because things that trade overnight always can have island gaps. The big question is UNG natural gas just about ready for a bounce? I think that was the question. And my answer, no, let me get to the question. It was a good question. It was just the headline. Oh boy, am I going to do this with one hand? Do you see a short-term bottom in UNG? Also, if oil goes up, does natural gas go down? You know, there never used to be a relationship like that. To a certain extent right now, I wouldn't even say there's a direct relationship because, look, here's USO. It's pulling back, but it isn't going anywhere really. And here's UNG, which is going to lower lows. Yeah, actually, no. The relationship is the trend, but not the price, the visual implementation of looking at the chart and putting in trend lines. This has broken the arch formation after a peak D, the UNG daily, and it's extended more than 1-to-1, way more than 1-to-1 to the downside. It's ready for a bit of a bounce, but the USO is a slightly different animal. It has pulled back. The weekly chart looks like it's making that arch formation. It has not gone to the lows. So I'm just going to say, I don't think you can make a correlation other than the basic trend of the oils itself and gas. Monthly charts are very weak, but I am looking at crude oil and I'm saying USO could trade now instead of 14.74, it could trade between 14.30 and 15.30. If it breaks much higher than 15.30, it can retest the high 15s, maybe 16, make a W formation. If it pulls back and it breaks under, I'd put it right there, under 14.20, that's about 55 cents lower, I'm looking at it and say, uh-oh, weekly chart is going to get even weaker. That's the USO. But UNG, you got to be really careful. There's just an abundance of natural gas. I would not want to play this for a bounce unless you're watching it really closely, and you can play it intraday. Look at you went to a peak E and pulls back. Now it's got a little bit of a bounce at 990. UNG, yes, the MACD and stochastic are improving, so it could bounce, it could try. In fact, on point-wise, it could do nicely. 1018 is the resistance, so 30, hey, that's a big percentage move. But it's very dangerous. If you're doing it, you've got to have your hands on the trigger right away. You've got to be ready to get out if there's a downturn. Looks to me like there's more selling pressure, but there could be a bounce, and the 10 to 1030s would be the logical area to be looking to see, can it get there and how does it hold? Next question was, oh gosh, where did it go? Oh, that's right. Good question in the den. There's a chart that he wanted to look at, for me to look at. Was it, I had it just a moment ago. Let me look at my list here. It was, and now I've lost it. What was the stock I was looking at just a moment ago? Someone help me. Who asked me? We had Paul, I think. Yeah, Paul. HZNP. Paul S. in the den. HZNP. I'm so pleased I found it. Why? Because HZNP hit the right letters. Why? Because this is coming off the bottom. And it made a perfect peak F top in the Chapman wave back in the weekly chart back in the week of the 24th of July of this year. It's called Horizon Pharmaceuticals. I think it's it looks like a biotech. If it says pharma, but it looks like a biotech stock. But it was an IPO. And after each of its peaks, it has a whopping pullback. The peak B was all the way at 1830, and then it came all the way down to the 200-period moving average of 785. Then it screams up to 39.49, week of July. No, that was in July of 2015. And then it plummets down. It takes huge swings. So the question is, I don't know if you were long or if you were short. No, you wouldn't be short. I don't think so. It's trading at 1826. I think this right now is the opportunity where the biotechs are finding some buyers. This could last right into next Wednesday, Tuesday, Wednesday. Then I think you've got to be careful. So as a trade at 1829, I'd nibble right here. But being in this area, I really think it's not a farm. I think it's a biopharma. I'd be really careful. So don't get carried away. You can start a position based on the 120-minute chart, and that's A, B, C. I really do think it's going to try to test the high of the 19th of October at 1964. So I go one step at a time. I'd buy some right now. I really would put in a tight stop. I don't want to be messing around with this if it starts to pull back. Because if it takes out, it's 1825, if it drops a point, and this thing really does move. If it drops a point, I'm not even in it. I don't even want it to drop a point. So 1828, 1829 right now, I put in a 17.90 stop on my position. Why? This has to. The way it's moving with the technicals and everything, it's at 1832 up $1 today. Something's going on. I like what it's going on. I'd say that if it breaks above 1843 and the high today is already 62. Wait a minute, that's not right. 1843. How can the high be 1862? 1843. Oh, the high. Oh, there's a little wick there. Okay, 1862. Oh, it's already in leg B. Yeah, I like it. So only as a trade, and if it becomes more, you'll know because it won't take you out. So I'd have a trading stop. Today, I'd have a trading stop of $17.90. So a trading stop of 40 cents. If it goes to 1864, if it goes to 1873 tomorrow, make your stop your entry point, and then I wouldn't get carried away. Let it go because it has to take out, form some kind of a breakout pattern by going above 1964. Above 1964, you're on your way, and you've got a position that could turn out to be a short-term trade that becomes a buy and hold for a little while at least. I hope that helps you. Let's go to Brent in Martinez, California. Brent, how are you?
Doing well, Basil. How about you?
I'm well, thank you.
Nice to talk to you again.
Yeah, good to speak with you. So you're looking at, 1348, 1353. Okay, you're looking at SLCA, which is U.S. Silica Holdings, Inc. I don't know if have I looked at this before?
Yeah, we've looked at it together before.
Yeah, you see what's happened? My system just shut down suddenly accidentally. I don't know what happened, but it did. And when it does that, I lose the most recent charts that I'd notated. They are there. I shouldn't say that I've lost them. I've lost them on the platform that comes back for some reason. I don't know, and I never have the patience to go back to find these things. So I just quickly renotated. I thought I recognized the symbol. So what has happened is it's made a kind of a double bottom from the 29th of September to the October the 2nd, round about the 1340s. Then it bounces up really strongly and goes to 1865 on the 9th of October, makes a double top. That's the pattern we were just looking at a moment ago. That's the reason why I think that the stock we were looking at, Horizon, needs to move right away. This one didn't. It moved right away, but back down, retested the whole area of the gap at 1454, and now it's trading at 1893. So it's in leg B. So now let me ask you, what's the story?
Oh, I had a buy alert at $15, so that's my buy-in. I was just hoping to get your analysis if I could.
Okay, so give me a moment during the break. I'll do a little bit of work on the technical. So far, it's looking good, but as you know, it needs a little more. It really needs to get to the 19s. Then it becomes a different character. I'll be right back with Brenton Martinez, California. Basil Chapman. Dow's down 55. S&P down 3. I'll be right back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks, don't forget, now we're coming up straight after my show. And just let me add, before we run out of time, let's see, Adam asked about the BKX. I'm looking at the XLF. The question was, will they make all-time highs? And my suspicion is, yes, they will. So that was the answer to the question. Tomorrow, in fact, Friday, I'm going to take a lot more time. I'm going to look at the different bank stocks. I'm going to look at the XLF because I think something's happening there that's really very interesting. Let's go back to Brent Martinez looking at SLCA, and that is U.S. Silica Holding, Inc., trading at $18, up 69, up 9 cents. Sorry, didn't mean to say 69, but you would have preferred it was 69 than 9. Now, do you have the stock, or you got options? I know that sometimes you use options rather than stocks, or sometimes both.
I have both, actually, on this one, Basil. So
See,
I have go ahead.
I was just going to say, if you have them further out, like December, I'd be more comfortable in saying to you that there are levels that I'd be looking at to take to add or subtract the options. If it's the stock, I would probably say that if you're in it, I would rather wait for you to, I'd rather not be doing anything on the upside until I see it take out the high of the 17th, which is at 1947. If it can do that, then all of a sudden you've got a cup formation, really a bowl formation in the daily. That's going to help the weekly chart. In terms of the options, I would probably say that as it hits each level, and the levels that I'd be looking at was somewhere at $19.47. That's probably where I want to take off some of the options, because the weekly chart is really looking like it wants to rally, but I'm not sure it's going to hold the rallies. There's a big difference between rallying and starting a move that goes from a buy signal to a buy mode, or just starting the H pattern that continues into another H pattern that looks like an M. And that's what I think we're looking at here. So that's why I was just going to suggest that I'd have particular targets for the options, and I'd just whittle away if it can go to each level. Why? Because I think you're going to be able to add back at the same price of the option, your original entry point, because it looks to me like it's trying to build a base, and it's going to keep coming back to test $18.10 to $17.90, somewhere around there. It's like it's trying to form a little bit of a base. So I hope that helps you just in my concept of what I'm looking at.
Oh, it does very much so, Basil. I have the March options, by the way.
Oh, you've got all the way to March?
Yeah.
Wow, that's a long time for this stock. You know, this stock could quite easily drop down to the 10s or the 12s and be back in March, right back here. It's got that kind of whippy action, especially in the monthly. But the way I'm looking at it, just on a shorter term, meaning 3 to maybe 4 weeks, is that I think it's trying to form a base. And that base says that it's going to be very difficult to break out and hold, but I think it'll keep coming back to test the base. That's really what I'm saying.
Okay, well, thank you very much, Basil. You have a wonderful day, and hopefully I'll have a chance to talk to you again soon.
Okay, thank you. Good luck with the trade. So, folks, this is what we're looking at. The Dow's down 52, S&P's only down 3. I'll actually do a little bit of the XLF now. You see in the XLF, what we're looking at is it's gone to, I'm calling it at least now to be conservative, a leg D. It's broken above the rectangle formation, but not by much, but it's broken above, and that is a big positive. Why? Because the 200-period moving average right there is at 23.92, and it's 50 cents or 48 cents above. Now, what we're looking at 24.44, the XLF is suggesting to me, based on the weekly chart, and you can talk about that 1852 low of August the 24th. I don't know how many people actually picked up the XLF with that, but they must have had a buys in for ages trying to get that. So I like the way this is acting. I think it's telling us a little bit about the market. I think that it's saying that there's some stability in the market. It's showing in the XLF, and we'll talk more about it tomorrow. In the meantime, just watch these levels closely on the day. 17,690 is kind of the support you want to see the Dow hold, and if it can break above into the 17,750s, that's going to be good. I'll be back tomorrow. I'll be back with
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.